Welcome to today's session and thanks for joining. In these sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. How perfect is your market and trade timing? Accurate timing is essential for swing trading profitably. It is a must in day trading. How perfect is your timing? How about my timing of the market and stocks? I changed my market view on Thursday from bearish to bullish and published that before knowing how the market would move. This is what I posted on Thursday. My preferred trading direction may change today and explain a bit more on that. That was Thursday. I even tweeted on Thursday about a buy candidate. The market was very much down on Thursday. I published this ticker in the Traders Club before knowing the result. Again, Thursday the market was down. Both turned out to be profitable decisions. My timing was perfect. It could not be any better. How could I achieve that? The secret was to look at multiple dimensions and notice that several, at least three, probably more, distinct is important, distinct dimensions were flashing extremely oversold situations on Thursday, from where recovery was likely. In such a market, I found a stock that was breaking out and shared it on Twitter and Q Traders Club. Did I buy more than one stock on Thursday? Yes, I shared one publicly, but I bought more. You could find those easily in real time using Q. The market recovered on Friday as Q projected, and the stock I shared hit the profit target. I will share the Q signals that led me to buy on Thursday itself throughout today's session. Greetings, I am Sagar Nandi, retired IT professional swing trading in the USA and India markets with only a single trading system, Q, that I developed myself. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. It has multiple components. I'll use several of them today. Instruments that often move the market. Dollar index. It tends to impact the market, though the inverse correlation does not always work. For example, on Friday, dollar index went up and the market also recovered. In any case, it tends to have an impact on the market. So I look at it, it's worth looking at it. In the weekly, though the backdrop color is still bearish, the shape is very much bullish, and importantly, it created a bullish reversal weekly candle. In daily, it is giving a bullish shape, bullish color candle on Friday. However, it is still in a downtrend. If it reverses from here next week, then it will resume the downtrend. On the other hand, looking at the weekly reversal candle and the closing being right at the high of the week, high of Friday, it may go up as well. It may go up, it may go down. I don't have any preferred direction on this. Mega cap index, they tremendously influence the market, no doubt about that, more on some pockets than others. Weekly shape is indecisive, color is bearish, and it broke through the trend line support. However, in daily, it stopped right at the watermark pivot support and it displayed a bull release signal on Friday with a bullish shape candle closing near the high of the day. Looking at that, my conclusion is that it is more likely to go up than down from here, and that is bullish. Market breadth, internal health check. Usually the market follows the internal health, not the other way around. That was the secret also behind me shorting the market at the very top, and all those trades made a nice profit. But let's see how is the market breadth today. Market breadth total view, broadest view of the market. On Thursday, there was a bingo signal invented by Mr. Ian Woodward, may him rest in peace. The bingo indicates panic selling, selling or throwing out baby along with bath water, as it is used to explain bingo, panic selling. On Thursday, the panic selling came. That was one reason why I thought a recovery was imminent. But not only one signal was enough to decide that, not only one signal was enough for me to buy stocks. There were other signals. I will explain them as I go along. Bingo was one of them. You can see there is one Hindenburg signal on Friday. Usually Hindenburgs have a bearish connotation. Certainly not bullish, could be neutral if it is just an alert. Whether it is neutral now or whether it is bearish on Friday, I'll come back to that when looking at the NYSE and NASDAQ, those two pockets from which the Hindenburgs come. I'm not going to explain more on the Hindenburg on Friday from here. We can see from growth versus value and small cap versus large cap that small cap growth is not doing well. Will that change next week? It may. On Friday we had a up move. We had an up move. Now this bread chart is not showing enough signals for me to buy. There was a panic selling on Thursday, and Friday we had somewhat up move, but this chart itself is not telling me to buy. That will change if we drill a bit deeper. And we look at the same total view custom index, broadest view of the market using weekly daily at a glance. Tough nuts to crack, isn't it? Total view custom index stopped right at the two trend line supports in weekly as well as the two trend line supports in daily. These are memory trend lines, tough nuts to crack. Almost like a miracle, it stopped right there on Friday, went up with a bull release signal and also bullish pressure U-turn. All those are saying that it is more likely to go up from here than not, and in fact it has a bounce long setup on Friday. That supports buying. So we looked at the market breadth, total view. That was not conclusive. It was conclusive in terms of being extremely oversold. When we look at the same custom index using weekly daily, now it is conclusive. Now it says clearly that it is time to buy. And that is one probably somewhat unique aspect of Q technique, Q traders are comfortable buying instruments, buying stocks that are not necessarily in an uptrend. Nobody will say this is in an uptrend, it is inside a box and it is bouncing up from multiple trend lines. So we have multiple reversal trade setups in Q. One is box, one is bounce. There are few others. And these have as good probability of success as a trend following trade, and I am personally very comfortable taking them. If total view itself is giving me a buy setup, that is certainly a time for me to look to buy. Now notice again, I started buying on Thursday. Friday, market recovered beautifully and my trades already came into profit. I explained some reason why I started buying on Thursday, the bingo signal. Other signal was that total view came very close to support in both weekly daily. These supports, as you know, are tough nuts to crack. It was very likely that those four lines coming together would hold, and that was another reason on Thursday itself I bought. Of course, I didn't buy a falling knife like the total view index itself. I didn't buy the market ETFs or futures. I bought stocks that were going up when the market was right at support with panic selling bingo. I'll come back to more reasons why I bought on Thursday throughout today's session. Drilling down from total view breadth to Nasdaq and NYSE. First, let us now explain the Hindenburg that was in total view. That actually came from NYSE. There is no Hindenburg recently in Nasdaq, and the NYSE one is in yellow color, so it is not a confirmed Hindenburg. So it is not bearish. It may be little bit, very little bit cautionary, but it's not bearish. That's why now I can conclude that the Hindenburg coming in NYSE as just an alert, not a confirmed Hindenburg, does not stop me from buying. And we can see now the bingo came in Nasdaq. Would you like to know another reason why I could start buying on Thursday? The 3-month new high low in Nasdaq was already at an extremely oversold position from where a move up was likely. Works like a clockwork thanks to Dr. Jeffrey Scott. After watching whose videos I implemented it in Q Market Breadth. I was willing to start buying on Thursday based on the bingo, based on the trendline supports in total view, and based on Nasdaq already being at extreme oversold condition in terms of 3-month new high low. If I look into the major market indexes, the weakest of them was and probably is Russell 2000. Here is another reason why I was willing to start buying on Thursday. Russell 2000, the weakest pocket, was so extremely oversold in terms of 3-month new high low that again a recovery was likely. These reasons are adding up, and when all these distinct reasons came together on Thursday, I could start to buy. Were there more reasons? Yes, I'll come to them later in today's session. From internal view, I now switch to external view. This is how most people around the globe see the market, but this is certainly not enough. Internal health is what dictates how the market will move going forward. So I look at that, and I also look at external view. If we look at the market ETFs in the weekly interval, we can see Dow Jones Industrials is the only one that is positive. All the others are negative. Whereas if we use the daily interval, we see all of them went up significantly on Friday. It seems like market was coming down, then hit support and went up. And of course, we saw the support was in total view, memory trend lines in both weekly, daily. We could anticipate a bounce up from the trend lines in total view. That happened on Friday. Let's look at the market ETFs. SPY hit right the trend line supports in weekly as well as daily and went up. Yet another reason I was able to start buying on Thursday, looking at price stopping right at the trend line supports in weekly daily. That worked. As you can see, on Friday price went up with a bull release signal, and again we have a bullish pressure U-turn. Again, this is not in an uptrend, it is inside a box, and Q traders are very comfortable taking trades in a sideways market. In this case, also a bounce setup allows buying, does not allow shorting. QQQ broke the trend line support, has indecisive shape candle in weekly, though the color is bearish. Again, it stopped right at the watermark support. It was inside a box, still inside a box, at the lower edge of the box. At the lower edge of the box, I am looking to buy. On Thursday, it stopped right at the watermark support, and looking at multiple oversold conditions, I was expecting it to bounce up. It did that. Now it has a box long setup in daily, though the weekly checklist conditions are not met. Therefore, I am not going to buy QQQ itself, but I am happy to buy QQQ constituent stocks giving proper buy setup. In any case, QQQ itself at the lower edge of a sideways box pattern allows buying, does not allow shorting. DIA, this was up for the week, the only ETF that was up for the week, in fact with higher than average volume, and it was up on Friday also. Friday's candle color is bullish. This is probably the only market ETF whose candle color is green on Friday. Therefore, it is the strongest one in that way. However, in terms of swing trading, it is right in the middle of the sideways range. So I'm not going to buy here. I would rather buy instruments that are at the lower edge of the sideways move. That is how my technique, Q technique, is different from others. It is the strongest one, but in terms of swing trading, it is not at the optimal position, whereas SPY, QQQ are at more optimal position, lower edge of the sideways range. In any case, this also, looking at weekly daily, allows buying, does not allow shorting. Interestingly, if you go back, if I go back, this is SPY, it never came in a downtrend. It moved sideways in a box range for a long time. Then it went up from the lower edge. It did not turn into a downtrending instrument. Trend lines are still holding support lines. Same is true for QQQ. Bounced up from the lower edge of the box pattern, did not turn into a downtrend. Support trend lines are not there like SPY, but it is inside a box pattern, not downtrending. DIA also is in a box pattern, and it is not even at the lower edge of the box. It is in the middle of the box, stronger than the other market ETFs SPY, QQQ. Market never came into a downtrend when you look at the indexes or ETFs or futures, but individual stocks came down a lot. That is the difference between market ETFs and individual stocks, and that's why the internal study, market breadth study, is very important. What about IWM? IWM was not in a sideways move. It was downtrending. Even that, though it broke the trend line support in weekly, it stopped at the watermark support in weekly, tried to go down and recover. In daily, it displayed a bull release signal and recovered the watermark support level. Again, it's not sideways move, but it held the watermark support. Is there a trade setup here? No. In a downtrending instrument, holding a watermark support can be a buy setup. It's not the box buy setup is for two conditions. One is for sideways move like SPY QQQ, another is for double or triple bottom. Here we can see it is at double or double and triple bottom both. Well, triple bottom covers double bottom, and it had bullish indecision at the low earlier, but still it is the weakest of the market ETFs. I will not like to buy the ETF itself. Now again, on Thursday there was something that led me to start buying stocks from here also. That was that IWM hit jump thrust low. That is usually unsustainable down move, and notice you did notice I showed earlier that when we looked at Russell 2000 internal health, 3-month new high low hit extreme oversold condition. So both the internal health of small cap as well as the external view of small cap was telling that a recovery was likely. I could see that on Thursday itself. That was also another reason that I started buying on Thursday. These reasons are adding up, isn't it? More reasons. Let's look at QH bucket analysis. Again, thanks to Dr. Jeffrey Scott. Now we have real-time bucket analysis. Pinpoints reversal points with remarkable accuracy. This is something that is immediately actionable. And with remarkable accuracy, that is proved once again. If we look at the percentage of stocks below mid Bollinger Band, it is still bearish. So still we are in a downtrend, recovering in a downtrend. We recovered from the lower edge of a sideways move for most of the market ETFs, and it is not oversold anymore. However, if you did watch it on Thursday during market hours, I did. I think all Q traders who have Q edge, they run it all the time in 100% real time because it shows certain things. What did it show on Thursday? It showed that on Thursday, you cannot see it from this graph, this is as of Friday's close, but on Thursday, the percentage of stocks in the lowest bucket, that is percentage of stocks below lower Bollinger Band, jumped by more than 10%. And that is one way this bucket analysis says that the market is so oversold that a recovery was likely. That was yet another reason I started buying on Thursday. This bucket analysis working as an oscillator, overbought, oversold oscillator, works like a clockwork and has remarkable accuracy. Again, I use that. One thing is to have a trading system, another is to trade with conviction based on the signals from the trading system. As you can see, I'm quite good at it, even for the techniques that I incorporated from other great traders like bucket analysis and 3-month new high low. I think I implement it in real life quite well, as good as anybody else. Another part of Q Edge, sector industry stock breadth, extremely valuable because it shows three things: where the market came from, where it is now, and where it may be going next. Very important to anticipate a move and then look for buy setups or short setups as the case may be. Long term 1 month is still bearish, still long term 10-day is bearish, but this week turn, you can say, neutral. It's not necessarily bullish. And we saw only Dia went up for the week. The other market ETFs are still down for the week. So weekly is still not bullish. Maybe we can say it is slightly bearish. However, today and 1-day periods are bullish. So bearishness is reducing, bullishness is increasing. That allows buying, does not allow shorting. Find a technical breadth. We only profit buying stocks going up or shorting stocks coming down. So this breadth is equally important, and the weekly breadth is bullish across all dimensions. no ambiguity anywhere. All the Q signals are unambiguous. That's the U in Q. C is complete, U for unambiguous, E for easy to use because it is color coded. In any case, the unambiguous signal say weekly allows buying, doesn't allow shorting, no second guess. And daily, certainly it allows buying, green all the way. Most of the bullish setups are coming from price extreme middle, so it's not overbought in any way. On top of the different categories being bullish, all of them, we have a green candle low alert. This is an aggregate signal. This cell lit up in green means now it's time to buy. What kind of stocks? At low price level that started to go up. Headwind is another unique reversal signal. There also we have an aggregate alert. And that is coming when jump thrust is extremely low. Remember in IWM I showed that it was hitting jump thrust low on Thursday. Now we see in aggregate all the liquid stocks are still at jump thrust red, very extremely oversold from where recovery is likely on Thursday. So what was it on Thursday? If Friday is extremely oversold, Thursday was certainly extremely oversold. And that was yet another Q analytics that helped me to project that it was more likely to go up than down, though it was a down day on Thursday. These things are adding up. Market level summary then. The most important trading decision is whether and where to buy or short or whether to stand aside. I decided to buy on Thursday on a down day. This week's market level summary, I could use Q as I explained to change my market outlook from bearish to bullish on Thursday. I started buying and tweeted about that before knowing the results as usual. That was perfect timing. Once again, isn't it? Friday, the market rallied across the board, and all the analytics we saw today, all Q dimensions, they allow buying, none of them allow shorting. Review of last week's trade. Another interesting part of this market recaps. Last week I did not share any trade idea, but I hinted about a trade that I took on IWM. And yes, I did take it. Last week until Friday, I made a nice profit shorting a lot of stocks, including Nvidia, just before earnings. I shared that also on Twitter. Last week, we were here. This is IWM weekly daily. Last week, we were here. IWM did have trendline support in weekly. I had a nice profit for the week. So I took a small risk trading a bullish vertical in IWM on Friday near the close. So that would be this day. On Monday, this day, initially price opened higher and my bullish vertical position had a small profit, not much, about 3 to 5%. And then it started to go down. I keep an eye on the market using market breadth charts in Q Elite and also the market percentage line charts on Q Global. I saw all across the board the market was starting to come down. It crossed break even, and when it was coming down and it was at 3 to 5% loss level, I closed my trade. It was in any case a trade in anticipation. Price stopped at trendline support did not mean I had a bounce setup. Clearly I had no bounce setup. That is different from the stocks I bought on Thursday, this Thursday. Market was down, but the stock I bought actually had a proper buy setup. Here I did not have a buy setup. It was an in anticipation trade. And again, I should not take that trade probably, but that was okay for me because I made a nice profit and I took a small risk and I took a vertical trade. So anyway, when it did not go in my direction, there was no trade setup to start with. I closed that with a small loss. Did I share more trade ideas during the week? Yes, two more. And let's go to, we could go to Twitter where I showed the chart, but I shared the ticker in the Traders Club. Let's go to Q Traders Club on my website. This is the stock that I shared. AMH. Would you buy a stock on a day the market sold off? I shared that on Thursday. Let's look at the analytics. Chart first. Why did I choose these stocks? Many reasons, at least 10 reasons from this chart itself. It came to jump thrust low and price extreme low, then gave a big move up 3. The down move was unsustainable and somebody stepped in to buy when it was falling sharply at a low price level, and on Thursday it gave a big move up 3 again. Along the way it again came near jump thrust low and price extreme low. So on Friday, from this pattern, which has almost never failed me, I was ready to buy anyway, provided it was fundamentally strong. By the way, I have to clarify that this pattern hardly ever failed me, probably never, provided it was a strong fundamental stock. And that makes sense when you think of the pattern. Somebody stepped in, not a small player like me, when it was falling sharply. What else happened on Thursday? It had a bullish reversal candle. Price went up with heavy volume. And remember, Thursday was a very much down day in the market. We already saw big move up 3, and it was inside a triangle pattern. It broke up, therefore giving a bullish flow setup as well as a bullish breakout setup. It had two buy setups technically. How about its fundamentals? Last week's theme was insider buying selling. I thought, why not use that theme? So this stock had insider buying. In the last week's market recap, I shared a number of trading ideas. I traded, I think all of them made a nice profit, which had insider selling flag. And here I had insider buying flag, undervalued stock with high earnings growth, therefore a 3-star buying candidate, and it has revenue growth as well. We can see that from here, earnings growth, revenue growth, has a nice dividend yield. Everything came together, 3.45%, not the highest that could be, but 3.45% is nothing negligible also. And again, thanks to Mr. Ian Woodward, it was a box stock. So not only it had high earnings growth in the recent quarter, it is a box stock. What does it mean in terms of earnings growth? It means that the stock is high growth both in the long term as well as short term. Those who follow Ian Woodward, and I never met him, I came to know about his techniques from Dr. Jeffrey Scott, thanks to both of them. The best time to buy box stocks, as I understand, is when they are breaking out, and I prefer to buy at a lower price level. This was such a case. It was not a cup and handle kind of pattern. This was a box stock breaking out at a low price level, and notice 90 plus percentage of peer stocks went up in single family residential rates industry. Amazing, isn't it? We could find a stock that was bucking the trend, breaking out on a down day, severely down day, and also an industry that was bucking the trend. The stock was up by 4.7% when I shared it, and it is a profitable company. You could look at that also. Fundamentally, it was telling to buy. And I shared the industry score also, see more. It was not only one of the strongest industries, it was one of the most accelerating industries as well. So it was a turnaround industry. On a very much down day, the industry was up by almost 4%. There was nothing that was telling me not to buy. Everything was telling to buy the stock, and I did that. I shared it publicly before knowing the results, and let's look at the stock. What did it do on Friday? Friday market recovered and the stock went up, hit the trendline resistance in weekly, daily both. I was aware of the trendline resistances, so I kept an eye on them. When price could not continue to go up, tried to go up but reversed, creating a false upside breakout, I booked my profit. It was a stock trade. My buying price was not the closing price. I could find it in real time sometime earlier, and I closed the trade. I don't like to hold long positions when trendline resistances are holding. So I followed that guideline of Q and I closed the trade with a profit. Again, I could buy a stock on Thursday with remarkable accuracy. On Friday, I was watching the market and I tweeted about one stock, Tesla. That was also a buy candidate. Let's look at Tesla. Why did I choose that? How did I trade that? Did I close it or not? Did I make a profit or not? Yes, 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 and yes. Let's give Twitter some time to load. Sorry about that. Twitter not loading. That's not good. Luckily on Chrome it is loading, so that's good. Let's go to my post on Tesla. This is on Friday. Tesla fell with high volume for several days. Here it is oversold, shown by stretch band indicator. It has a bullish headwind reversal signal, unique reversal signal. You may think of these headwinds as invisible support and resistance. Support when they come at the bottom. They are like trendline support, like watermark support, but invisible. Quite reliable. Not a trade setup in itself, but points to possible reversal. So because it had a bullish headwind reversal signal, I mentioned if that is confirmed at the closing, at minimum, one may close any bearish position. I did not have any bearish position. I traded bearish positions in Tesla earlier, but all those were closed. And one may also look to buy if there was a Q trade setup. The Q trade setup did not confirm for swing trading. Let's go to Tesla now using weekly daily. The bullish headwind in daily signal confirmed, but the trade setup has certain requirements on the weekly. The checklists are available on the website and you probably all know them by heart. The weekly checklist was not fulfilled, so I did not hold on to the trade, but I did trade it. How did I trade it? During market hours, I keep an eye on the market pockets using the Q Global market percentage change charts. This one. And notice what happened on Friday. In the beginning, all the market pockets came down except one, the yellow line, which is DIA. DIA was strongest for the week. It was also strong on Friday. Right at the open, it went up, while all the other pockets, Nasdaq 100, Russell 2000, S&P 500 and Mega Cap Custom Index all came down. So yes, Mega Cap also came down as a whole, as the custom index. And then some of the mega caps reversed. Tesla was one of them. And if we look at the pivot chart now, it opened here, this pivot line, below previous day's low. So it was a gap down open, not a very big gap down, but still a gap down open, tried to go down in this 5-minute bar, the first 5-minute bar after the open. The market was going down except DIA, mega cap custom index was going down. However, in the next 5-minute bar, it's a 5-minute chart that I use in the morning session, it reversed, and in the third 5-minute bar, it gave me a breakout in the bullish direction, early range breakout, which also then become a gap long trade setup. And by that time, interestingly, at this price level, the bullish headwind had already come in the daily interval. So I bought the stock, I don't remember here or here, I bought the stock at one of those positions, and as is my practice, when it went here, I booked at least partial profit. I was holding the remaining position till the close because the headwind swing trade setup did not confirm. I closed the remaining position also at the close. And when I am taking an intraday trade like that, my stop is decided by 5-minute interval in the morning session. Therefore, I am able to buy many more shares. So though this percentage move from my buying point to closing point or the initial profit booking point is not a lot of percentage point move, because I buy more shares, the dollar amount tends to add up. So this was also a trade I shared publicly, or a bullish idea I shared publicly. I closed it. Now there was another stock also, another mega cap that went up with a similar pattern, that was Nvidia. Interestingly, Nvidia is one stock that I tweeted about just before earnings, and it will be probably worth, if you bear with me, going back to that post if I can find it. Yes, here. The Nvidia earnings are today after the market close. This is on the earnings day. I am posting on Twitter. It tried to go up in the morning session but then sold off. We can see that from the daily chart as of that day, 30-minute chart, 10-minute chart, 5-minute chart. Tried to go up, reverse, tried to go up, reverse, tried to go up, reverse. And it had trend line supports. Daily one was far away, but the intraday ones were nearby. So I suggested looking at the intraday time frame supports and to see if they break or not by the close. The daily support I mentioned about that, that was far away. I was watching if the intraday supports break. At the close, I think it went more bullish, but I suggested a possible bearish trade, bearish trades just before earnings or bullish trades just before earnings. I don't like to take them with stocks because the loss may be too high that I don't want to stomach. So I traded with synthetic short with a protective call. What Dr. Jeffrey Scott says, chicken synthetic, something like that. So it had 3 legs, one short call, one long put, and to minimize the risk, I had one long call also. So one, let me change the color. Never mind, I think you understand these things quite well. So a short call, long put, that is synthetic short stock, and then I bought a further out of the money call. And it had a very attractive reward risk ratio, both at 1 standard deviation and 2 standard deviation. The risk was almost half of the reward, or in other words, reward was about twice the risk. So I took the trade, risk was defined, and what did Nvidia do? After earnings, it tried to go up and fell sharply. Stopped where? at the top notch to crack trendline support. I had a very nice profit in the trade. I closed that with a profit. Again, I don't like to hold short trades when trendline support is nearby. It was there in weekly, daily both. On Friday, it tried to go down and immediately reversed. I wanted to come to this chart. It looked very similar to Tesla. I was buying Tesla and I saw that Nvidia had a similar pattern. A gap down open, not again very big gap down, but gap down nonetheless, and then breakout. But notice Tesla broke out at this point. Nvidia broke out at this point from early range high. It could still be bought and a nice profit could have been made because Tesla broke out first. When buying, I like to buy the stronger candidate. I bought Tesla, but that was not the only reason. Remember, I shared earlier many stocks at a high price level had insider selling. Nvidia is actually one of them. Yes, it stopped at the support and I could buy it, but I did not buy it. Nvidia still has insider selling flag set, whereas Tesla I noticed, and I track these stocks regularly, so I tend to have an idea about their status. Tesla had insider buying status. So when I had a gap day trade long opportunity in both the stocks, again I just used the theme of the previous week. I chose Tesla over Nvidia, and also as I showed, Tesla broke out of early range before Nvidia did. So all the trades I shared before knowing the results made a nice profit. IWM, I hinted about it. I came out with a small loss. That was last week's trades. I did quite well once again. Thanks to Q. This week's trade idea. Let's make good use of the Q multidimensional analysis. In fact, there are many nice looking buying ideas. What do I mean by nice looking? Low risk. And the ones I bought on Thursday, they are already in a nice profit mostly. But let's try to find a buy setup as of Friday's close, and we'll use the multidimensional analysis starting with Finder. Let's go to Finder. Let's make a good use of Finder. I pointed to the bullish alert from green candle low. I pointed to the bullish alert from headwind. Why not? I try to buy a stock that has both green candle low and bullish headwind. But those are not necessarily trade setups. It should have a trade setup. The trade setup may be headwind itself. I look for signal first and then look for setups, or maybe look for setup first, doesn't matter. I came to the bullish tab. Let's flag for the headwind, and yes, these are headwind setups as per daily. I want also a stock with red candle, sorry, not red. I'm looking for bullish stock, green candle low. So let's look up the momentum signals, flag the green candle low, and I would like to have at least 3 bullish momentum. So let's click that. I'm left with one stock only. Nice, isn't it? Started with thousands of liquid stocks, had a certain pattern in mind, stock with green candle low and bullish headwind, and I could filter down to only one stock. It has green candle low, PSAR reversal bullish, pocket pivot bullish, Kahuna bullish, Bongo bullish. Minimum 3 I looked for, it has 5 bullish momentum. What are the trade setups? Let's flip back to Q setups again. It has 3 possible buy setup. That is nice to have. I am looking for only one, but having 3 does not harm. It has a possible box setup, possible headwind setup, possible breakout setup, and this is the time I'd like to look at its fundamentals. I'm doing bottom up. I would not like to buy BlackRock. This is BLK BlackRock unless its fundamentals are strong, and it has to be in a strong industry, adding all the dimensions together. The stock is steadily going up after coming down. That is fine. That's what the market did. I notice funds are buying, medium valuation, earnings growth is accelerating, revenue growth is also going up. It has a dividend yield of 2.1%. It's a profitable company. 92% of peer stocks went up. I'd like to buy a stock in that industry. Let's look at the industry's relative score. Notice I have not looked at the chart yet, isn't it? This industry is also one of the strongest industries, and it has one of the strongest acceleration also over 2 days. The industry went up by very respectable 2% plus on Friday. So technical finder is saying it is a buy candidate. Fundamentals and industry scores are saying that now is the time. I'd like to open it with charts and look at it. Let's look at it using not only at a glance but also with the momentum charts. I'll drag it to this monitor. First look at the momentums. It has a green candle low and it has the 4 other bullish momentum. So total 5 bullish momentum signals. We have a headwind setup, and if we apply the checklist in this case, in case of Tesla, we had the headwind signal, but the setup was not confirmed because of weekly, but here the setup is confirmed in weekly. Therefore, we have a bullish headwind setup and we also have a breakout buy setup. Relative performance is going up. It also has a bullish reversal candle, went up with very high volume in both weekly daily. So this is a buy candidate, and how I started, I looked at certain patterns, wanted to find a trade with green candle low and headwind both. There are many ways you can look for trades. This is my buy candidate today, and as I said, there are many buy candidates today. If you carry out the 360 degrees analysis like I did using Q, you will find many other buying candidates today, just as you would find either long or short almost every other day. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live sessions I am quite confident shows, there is no reason not to do that. Trade profitably. Thank you.